The Economic Update with Tatiana Bailey.
Well, the U.S. economy rebounded sharply during the second quarter of this year.
Right now, Dr. Tatiana Bailey joins us with a breakdown on the turnaround and a look at the mixed bag of economic data.
The big news this year is that GDP rebounded sharply in Q2 of this year, growing at an annualized rate of 3% or 2% compared to Q2 of last year. This follows a 0.5% contraction in Q1, the first such decline in nearly 3 years, all highlighting the large swings in economic momentum. The turnaround was driven largely by a reversal in trade flows. Imports dropped sharply after a front-loaded surge in Q1 as firms tried to get ahead of tariffs. While I welcome solid GDP growth, it's important to look under the hood. Consumer spending was soft, up just 1.4% in Q2, following a weak 0.5% gain in Q1, the slowest back-to-back rates since the pandemic. For comparison, consumption rose about 4% in both Q3 and Q4 of 2024. Business investment, which surged in Q1 due to the anticipated tariffs, moderated to a 1.9% gain in Q2, led by equipment spending, especially in computing technology. I always like to see business investment as it adds to GDP and represents growth, but even more so when those investments are in new technologies that can increase worker productivity. Hello, ChatGPT. Federal spending contracted again this quarter, driven by cuts to non-defense expenditures due to ongoing austerity efforts. Residential investment fell 4.6%, the weakest since 2022, as high borrowing costs continued to dampen housing demand. The quarterly PCE price index slowed from 3.6% in Q1 to 2.5% in Q2, which is welcome news. Yet, policymakers remain split on how tariffs may affect inflation, especially if importers pass their higher costs onto consumers in the second half of this year. In sum, there is a mixed bag in terms of economic data. We did have a June increase in inflation. Most experts are calling for further price increases due to even marginally higher tariffs. Consumers are pulling back a bit, and declines in government spending are usually deleterious to GDP. However, the labor market is holding up, and the new tax bill may provide a short-term boost to economic activity. In other words, the path forward is opaque at best, but there's a slew of economic data coming up in the next couple of weeks, and I'll keep you posted.